Hello, trading is closed on August 22nd, 2019. We'll go over our calls. Had some earlier targets. They were satisfied, resistance over the target. Look for the pattern with the early high. That's it. Tomorrow's pattern has the early low. Unless there's a big drop early, tends to be a positive day and close near the high. I'm thinking this has a good chance of holding here, so I'd like to see a big drop early. Things go according to plan. They don't always do. MEJT said this rally was false and we retraced, which we did. Well, here's what we said yesterday. The pattern today had the early high. Doesn't mean you wouldn't gap down. Thought it was a negative pattern unless we gapped over the high. Well, we gapped over the high, so the call's canceled. Let's just go over once again the difference between a call which is canceled and a call which is wrong. Wrong calls cost me money. Cancel calls don't. You all know about Warren Buffett. He's supposed to be one of the most successful investors of all time. People pay a fortune just to have lunch with him, find out what stocks he buys. The implication, he's a great stock picker. Well, that's true, but it's not the whole story. In bull markets, he routinely underperforms other stock pickers. He very famously stayed out of the internet bubble in 1999. Other people were making money hand over fist. People tried to convince him to get into that asset class. He refused. And as a result, when everyone else got killed, when the internet stocks crashed, he didn't. The entirety of his outperformance has come not from picking stocks which go up, but from avoiding stocks which don't drop very much. Now, the price you pay for avoiding losers is sometimes you avoid winners. And it's a price that's well worth paying. If you don't catch every blip like this, like I had no call today because it was canceled before the open, so I missed this drop, missed this recovery, so what? It's okay if you miss calls as long as you don't make wrong calls, because you're going to make some right calls and they'll more than make up for the calls you miss or don't call, just as long as you don't have losers. So I don't care if I miss a call that is right, just as long as I don't make a call that's wrong. Well, I've had a long-standing target of 27.40 for this drop. The idea was blue A and blue C would have a Fibonacci relationship. And if you set blue A at 78.6, then blue C would end around 27.40. Now, what's interesting, if this is the top of purple B, is if that is purple B, then purple A and purple C will be exactly equal at the same price. So for aesthetic reasons, I like this high to hold. If it holds, here's the count that explains it. If that's 1 and that's 2, we should have a steep wave 3 down. But again, this is not the only count that works. If we get a straight line drop, you've explained it, but something else happens, you can probably explain at this point in the pattern too. Well, this is an important trend line for me. You take this low and this low and this low and that gap, and you hit right at today's high for a 335 point rally. And then you go back 335 days and you get this high. It's not exactly how Gann squared time and price, but I think it has relevance. So again, I'd like for that to work. Well, here's the origin of the left stilt. There's resistance over it, and on a closing basis, resistance held. Here's the hole in the wall gap. It usually fills pretty quickly. Commonest time would be either today, which didn't happen, or early tomorrow, would imply gapping down, promptly undercutting this low, which is 28.9960. Kind of a stretch, but not completely out of question. But if it happens, it would be compatible with this being wave 3 down. Friday's pattern has the early low, doesn't mean you won't gap up. Unless we have a big drop early, the day tends to close near the high and be positive. If I'm right about today's high holding, we'll see a big drop earlier. The call's probably not right. On today, it'd be a rally all day long. We couldn't hit prior highs. Couldn't close over prior highs. Hit a new recovery high, then undercut prior highs and close red. That's a negative pattern. It'll invalidate it if we gap up over the high. Otherwise, lower prices are the print. I believe a new down leg should start soon. Today's high is a very good candidate for the high of the present consolidation. And as always, if we gap up smartly, the call's killed before the open. Tomorrow's a pattern with the early low. If there's a large drop early, it increases the chances that this high is going to hold. If we don't have a big drop early, it increases the chances that something else is going on. So I'm going to have to see if I get my big drop or not. And as always, I don't have to bet money on it at this point, because if we do have a big drop, we have a lot more to go on the downside. And that's today's call.